Welcome to my gold trading strategy. I'm going to try to mark out how I trade gold and then the simplest way you can also use this strategy. First off, to use this strategy, you go on the higher time frame. You need to determine the trend of the market. From what we see on the daily, on the 1 hour time frame, let's go to daily. On the daily time frame, basically what we see is an uptrend. The market is moving up, so there's an uptrend. So it means we are very good if you are taking buys than we are taking sales, because the buys will last longer and give us more profit and more stability. So what you first need to do is that you need to mark the recent highs and lows of the market. So in doing that, the best way to identify them would have been the line chart, but you can also identify them with the candlesticks. So I use a horizontal ray to mark out the very high. So starting, I'll mark all the highs I see, then I'll switch to the lows. So this is the recent high where the market got to and started retracing back. At that point, we have another high here where the market created a high and didn't go up anymore, came down and started going up again. This is also another significant high. Note that we are marking off the wick because we are on a higher time frame and the wicks are very important. Then I also mark here, this is another high the market got to at some point and retraced. So that's it. We are marking most of the relevance. This would have been another high, but mostly keep your markings to the recent market activities. I don't think price is around this area anytime soon, so we mark out all the highs. Then you mark out the lows too. Within here, we can call this another high as well, because the market got to this part and then traced down. So let's add this to the highs. Good. Then we are to mark out the lows, the recent lows where the market came down, lower low or lower high. So this was the high. Let me use this to show. In actual sense, if you are using this to mark out or to trace the market movements, first, like the part 2, market was here, came down, so this is a low, went up. This was quite choppy for several days. I went up to this part, came down here, and then the most significant, this could have been a high and a low, but we take it from here. Market was here, came down a little bit, went up. There's a high, this is the next low, there's a high, gave us another low, and then mostly swing to this part, came down here, went up a little, then came down here. Market is currently around this area, so this is not a high because we don't have any major close. So this is sort of how the part of the market looks like, but let's not dwell on this. So I'm doing just this to know the lows. So for now, let's go back to what we are doing. Put the lows in place. This is a significant low, and this particular one is also a low here. There is a low here. Market came here and went up. Now this is a very recent low we have here. Good. Then this is also another low. See, this would be a low and a high. So this is a low, then this part, this is a low, markers are is marking up. It's supposed to be a high. Refresh this. Okay, reload. So at this point, I think this should load up. Good. Once you are done marking most of the part on the higher time frame, which is the daily, the next time frame you should focus on is the 4-hour time frame. So on 4-hour, what you do is you check out the same thing, though some of the areas will be catered for by the daily, but the areas that the daily has not taken care of, you have to go back and then mark them as well on the higher and lower time frame. This strategy is quite easy because you'll be taking trades off the higher and the lows the market is creating in recent times, and this strategy works almost let's say 60% to 70% of the time. If you understand it well, you can use it to make a lot of money. So whilst my chart is loading up, we are back on the 4-hour. This was the highest. I tried to mark multiple times, couldn't load. Now it has loaded, so I'll take part of it off. On the 4-hour, we see most of the highs and the lows has been taken care of, so I just have to adjust them to the wicks and make sure they are in place. So this was a high we marked, looking like a wick on the daily time frame. Here it shows that it has taken care of the highs, and you could see this is also a high that we didn't mark on the 4-hour time frame. Because you're on the 4-hour time frame, we are making sure we get everything marked out. So this one is also here of the week. Then the recent lows, I think most of the highs has already been taken care of by the daily time frame, so this is quite a good one. And I think there are some highs here. If you go to a lower time frame, you'll be able to identify them. So let's go down to the 1-hour time frame to check that as well. So here we are on the 1-hour time frame. Shrink our charts the most. Then you see still this is the major highs, and then there are some smaller highs and lows within this one. We can mark them out. So this, the recent high, then the low. So let's mark out all the highs, major highs the market created. This is a high, and this was a high too. You may not see what I'm saying clearly, but the more you practice, you get to understand this. So these are highs that I've marked. I'll mark the lows as well. So this high is almost on the low, so it's the same thing. I'll just keep one of these lines. You have messy charts if you keep so much of them. So most of the time, if you are okay with it, you need to go with your eye. At least we say it's not a clean chart that you eat. It's how it looks and reasonable it is to you, and the kind of trades you get off your chart. That's important. It's not about making your chart clean. So on the 1-hour time frame, you could see this was a high on Wednesday. So we mark that out. We have another. This was a low, a recent low. Then this is also a high at some point. Good. The reason we are marking all this out is because gold tend to do two main reactions. The two main reactions is that whenever there is a movement on gold tend to react mostly to a new high. It gives you a very sharp rejection of a virgin zone, something like the top. So if you have this like this, this is an arrow. So if you have something like this, a high, a low, a high, then a lower high, and a higher high, mostly when gold comes up to this part where market has never been before, it tends to react to give you a very sharp reaction before, if it will move on, it moves on. This sharp reaction on a higher time frame will give you a bigger amount of pips. So you watch out for that whenever gold is approaching a very high that it has never been before. That is one of the things. So on a new or a fresh level like this, if market is coming to this point, we are putting a line right here, and then we try to make sure whenever the market gets to this top, we are on charts to identify when the market touches here and see the reaction on a lower time frame and take a sell. If it's the same thing, if this is the low and the market is coming to this low, the same thing is expected to happen once the market has never been to this place before. We call it a virgin zone. So here you wait for the market to retrace to this point, and mostly it will react, then go up. That's most of the time how gold reacts on the chart. So that's one of the strategies you should pay attention to on the apex. Let me show you examples of what I mean on this. Look at what happened here. This is on 1 hour. Market was here, this was a high, came a little bit down, tried moving up. The moment it came to touch this high again, it dropped, gave us some good amount of sales, though the market is an uptrend. But once it touched this virgin zone, it gives you a good amount of pips to bank on. So it's almost 300 pips drop just from that particular move. Look at this. This rejection gives us almost 300 pips. So it's the same thing on several areas. Look at this. This can be called a virgin zone again. The same thing happened. So this is like this. Market was already on an uptrend, went up, created a new low here. So this is a virgin zone because the market has not come back. Created a new virgin zone here, came down, tapped in the virgin zone above here, sort of like a double top, came all the way down and tapped into this virgin zone again, then boom, started going up. See how it works? So this is one of the strategies. That's why we are marking the highs and the lows of the fresh levels. So whenever market gets to those points, you will be on the lookout. The same thing happened here. You can see here around this area. Look at how market reacts to this sort of like a virgin zone. It gives you a good reaction. This was not exactly on the virgin zone or the fresh level. We can make it, we can call it fresh if you don't want to use the term virgin. So this sort of like will give us a reaction, but this did not necessarily tap in. So that's one of the main things we are talking about. You can get this type of setups, and you don't trade directly off the 1 hour. So to take a trade, you need to go to 15 minutes and 5 minutes. Okay, before we go to the 15 minutes, let me explain the other type of setups that we look out for. So this is one, right? This particular one we've marked out is one setup. One. So the next kind of setup you mostly see on gold is this way, where you can have the high and a low, then you have sort of like a free liquidity area. So the market will range like this. You are in an uptrend, so use uptrend, comes down a little bit down, then move up. Now this place has given us a good reference. At this point we expect the market to come down again. Good. In a normal traditional trade, we will mark out this area as our previous high, which is a resistance broken term support. So this place is expected to resist this and go up. Then we also mark this area as the low, as the support, the ideal support area. Let me make this straight. Okay, so market is expected to one, tap in this area, supposed to tap here and go. So we say this is a B setup, a B setup. That means most likely this will happen, but this will not give you. Most often you may try hit stop loss in 50-50 if you get in at the top here, but in some cases the markets would break down, come here or tap within this area, which we call free liquidity, before it goes up. So the latest place is this place, the A. This is setup A. When market gets here, it's very good to take a buy, because this is support, and in normal market structure we don't expect this pullback to take away or to take off or to take away this support. Once it breaks this support, it means the trend has changed. So mostly it will fake out, come here and go up. Sometimes it will break this with grab momentum and move up severally. So you understand this. So in this case, you either expect a buy from this area. So this is your setup A. B, put your stop loss a little bit here, then you target to the recent high. So this is one setup. Then you can have your setup B somewhere here, down here, just like a virgin zone or a fresh level on the lower support. So once price gets here, you are expecting the market to move. First take profit will be here, then your main take profit will be up here. Why this is a setup A is because if you're able to catch this at a sniper entry, you are going to get a bigger risk to reward. You get a bigger risk to reward compared to the setup B. So with setup B, you are going to get 1:4. But if you're able to catch this setup A and hold it long enough, you're going to hit almost 1:5 or 1:6 and above. This particular one is almost 1:11. But this is not the real chart anyway. This is just a demonstration. Now we've seen the setup 2. This is, so let's call this 2, setup 2 or strategy number 2. So here set up 2. Honestly, I don't like giving names to my strategy because it's basic knowledge. I don't want to give like sort of different names, and you'll be calling names and trying to do so many things. Very simple. Just understand the market movement and structure that I've taught you and use it in what you are trading. So let's try to find out how this plays out in the market. With this, you mostly see it on a lower time frame. So let's go to the 15 minutes and the 5 minutes. So here I'll show you the entry confirmations once we are done, but today we are just sticking with identifying the pullbacks and how it reacts. So we are on let's use this area, any of the areas. I just want a suitable one. So this is current price action. See what I'm talking about. I'll use a blue line. Okay, let me use a trend line and make it okay. I'll make it a horizontal ray and change the color to blue because we are on a lower time frame. So here we had this. You expect a pullback to this area. There are small areas you see in the market that are important. So I want a good place to demonstrate this. Let's use this area. This will be a very good one. There's an uptrend, obviously. So we mark out this. There's a high. We change the color to blue so we know it's on a smaller time frame, and this is the low. So you come here, this is also a high, and this is a low. Now this is a good setup. Let me mark this one out again. This side, good. So this is a high again. Look at how market came down, tapped in and went up. This will become another high. This is a low, so we are not going to. This is a low here, and this came to tap in a virgin zone and went up. So let's see here. Now when you go back and you look at this, this is the low, this is a high. Look at the high, the mark here. Markets broke the high, went up, came back to tap into the high and went up. This is a good number of pips. If I'm measuring, this is about 100 pips movement just from that tap on this zone to the previous high. Mostly it comes to the previous high. And on the other hand, if you are looking to take the sell, look at the reaction when it tapped into the virgin zone of the high. At this point, this was an all-time high on gold as at that time. Forget about this side of the market. Just forget about this side. This side is not part. We are focusing on this side. At the time this was forming, this was an all-time high. So this was a fresh zone, and this came to tap in and it came back down. There was a reaction. So this proves that the other setup still works. Now market went up, came down here again. So at this point where this high is marked and this low is marked, this area is called a free liquidity, meaning when market tap into this area and start moving, you should be looking out for a buy because the market will move very aggressively up from that area. That's what mostly happens on gold. It means there is a fake out. Think market will react at the top, but it comes deeper into the support zone before it goes up. So this is a good setup Then this one too, it's the same thing. Market reacted off the high, boom, went up, came back to around the virgin zone and went up. So this particular one, you could have expected the market to react here. Oh, markets just broke this high. So when the market goes, let me zoom in. When the market goes up here, it should tap here and go up, but market did not do that. It did this, came, broke up, came all the way to the base here before it went up. So this is your setup A right there, then it went up. So that's basically how the two setups, basic setups work. Basically that's it. That's the two things you look out for on gold, and this will give you so many trades and good trades to trade off. In the same way, if it's in a downtrend, look at this. On the 15 minutes, we can go to the 5 minutes and you see more details of this, even on the 5 minutes as well. So 5 minutes will give you more candlesticks to confirm what you want to see. So on the same thing, let me show you this. Let's look at the downtrend. Good, around this area where the market was consolidating. Now look at what market was doing. We can come here, saw the same thing on the buys. Market came here, gave you a pink bar or a hammer and went up. You remember all the candlestick confirmation or the candlestick patterns we talked about, but in this, when you talk about entries, I'll explain properly. So let's look at how this downtrend went. Markets finally, we were expecting that market will reject up this place, but market broke, took this virgin zone and went up. So this tested around this area and tapped in, went up, gave us a reasonable amount of pips. After this, the market broke this completely. That means the market has changed course and it has started giving us a lower low and a lower high, a lower low. So now the market is selling temporarily. So this was the highest and market was selling. So anytime market comes to this place, it sells. So this is more of our setup A, B instead of A, because if it is setup A, you will expect the market to go all the way up to this side, but always when it taps the first area here, then it drops. See this? So this becomes our new lower high. Then market broke this all the way, came here. This one you will not catch with our strategy. You may hit SL or you have to wait for it at the top. Sorry. This comes down, breaks again. Look at what happens here. This is the low. Market came all the way to this side, around this area. Let me move this to the side. Tapping this zone and sells off again. So this strategy works most of the time on gold. You take your time to watch it and practice. So I want you to take this assignment. You've seen how I've plotted this chart from the daily to the 4 hours to 1 hour to 15 minutes and 5 minutes. I want you to plot them and try to sit down and analyze how the market is moving and check on your chart. Once you are done with this, you move to the next phase. If you have any questions on this, you hit me up on WhatsApp and then I'll do further explanation, then we proceed. Thank you.